Okay, I'm live on YouTube. Let me just make sure that my other lives are going okay. I don't know why it's so hard to tell. It should be easier to tell. Maybe I'm just being stupid. Um, okay, all right. I think I'm good. But if I'm not, then I'll figure it out and I'll get better as time goes on. Welcome everyone. Welcome back to YouTube. This is another day of my trading vlog. Not much to talk about today because I didn't do that much today. On Wednesdays, if you've been following him for any period of time, you know that on Wednesdays and Thursdays I don't trade my own ideas as much as I trade my mentor's ideas and other people's ideas because I still believe that I have way more to learn and I'm still a beginner. I'm still learning for sure. I've not even been in this at less than a year, right? So way less than a year, maybe 6 or 7 months into the game here. 4 or 5 months of actually doing doing it consistently instead of just kind of just dabbling, right? It's been 4 or 5 months of me doing this seriously, and it's been maybe 2 months or 3 months of no, it's been like this is my second full month of vlogging about it, which I think is an invaluable part of my own trading psychology. And what I'm learning is that if I just obsess about it and take like a million trades, I tend to over trade. And so today, there wasn't that much of an opportunity according to my mentor, and it was just kind of a boring day. And I didn't do all that much. So the opening range breakout on crude oil, again, I always take the minis here, the E mini crude oil to risk less with the same amount of points is it was kind of boring, very very boring, very muted. Today was not only did I have the opportunity for an opening range trade, I also had the opportunity of the news breakout, which is at 10:30 a.m. Eastern on Wednesdays for crude oil, and you can just see it's just been it's a very muted kind of response here. Give me a second to get my bearings. Not that much action happening. Where's my opening range? Let me get rid of this. Let's get rid of that because that's confusing. The opening range was 9 o'clock. Yeah, so not much action here, right? So this is it right here. Not much action above or below. So here's what would have happened, right? And this is as I was listening to my teacher talk about it. He's like, I don't really like this because the opening range is pretty much at the overnight low, or high rather, and the overnight low is like kind of close, and there's a pretty obvious uptrend. There's no reason to try and take the break down. That's going counter trend, and with counter trends, your risk reward is significantly lower with lower probability. So it's like, why would you go against the trend? I guess in retrospect, in hindsight, you could argue like, oh, you could have scraped a 1-to-1 there, right? If this is 5 ticks or 5 ticks, you could have gotten a 1-to-1 just out of to the next quarter. Maybe, like you could have done that, I guess, but that's not the kind of stuff that we're looking for. That's not the kind of trading that I like to do. I like to get a lot more risk reward, a lot more bang for buck. And so even if I did take that, more than likely I would have looked for a 2-to-1, or at least to this, nice even little, small dime over here on the 42 even. I would have never have gotten there, and I don't even have a chance to move my stop, really. I would have gotten stopped out. If I took the break long, same situation. It was already at the overnight high, so there wasn't much room for me to take it. So I took nothing. And usually I'm pissed when I take nothing because I am like I feel like I feel FOMO. Not gonna lie, right? I feel a little bit of FOMO, and I feel like I wanted to get in something. I wanted some action. I missed out on potential profits and whatnot. And today was very much the other side of that coin, where I was like, I could have forced myself to take the opening range blindly, and I would have gotten stopped out both ways. So I would have lost it. So like 5 times 2, because I would have lost it twice, both the long and the short. 10 points is $125. So that's a negative $125 on the crude oil that I spared myself by not taking it. Now, I mean, on the long, could you have pushed it up a little? And you know, you could argue like, oh, you could have gotten 1-to-1 on either side. Or why would you not do that? That's good, but that's not something that happens. That's not consistent, right? If I'm only going for 1-to-1s, I have to be right more than 50% of the time for that to ever be profitable. And I don't think, I think that most successful traders that I've talked to are not there. It's ironic because the ones that I talk to that I know are the most successful, because they've been doing it the longest, 10-20 years, 10 years minimum, to me is like, I don't want to learn from anyone with less than a decade's worth of experience. Honestly, like that's just me. Like preferably like 12 years or more, because 12 years ago is when we had the global financial crisis, and I want to know that you know how to trade through recessions, right? Any idiot can trade and do well by when it's a bull market, right? That's not impressive to me at all. I want to know that you know how to trade through tough times, like, and through a recession, which, you know, it's debatable whether we're in a recession right now, but in terms of market volatility, and it's like what most people think should be happening is not what's happening. So it's like a weird time to be trading. It's not normal circumstances, and I want to know that you can trade under abnormal circumstances. So I don't really want to learn from anybody with less than 12 years experience, personally, and preferably even more than like closer to 15 or 20 years, because I want to know that you were trading successfully in 2008, not learning in 2008. So, you know, like that's where that time frame comes from, just so you know. I don't know if I ever explained that before, but that's why I only want to learn from people with like pretty much minimum 20 years experience in the game. And so anyone who I pay, they have a minimum of 20 years experience, or 15 years experience, right? And a lot of them actually have 20, 30, 40 years of experience. I won't learn from anyone with less experience than that, right? So and what he's saying is like, you know, today is one of those days where it's an inside day. It is just muted, and just like his overall demeanor was this, like his, you know, you do this for 20 years, you develop instincts, right? And what I respect about people like that at that level is like they're not able to necessarily articulate what it is that they're doing and why they're so confident. They just know that they have decades worth of experience under their belt, and there's just like an unconscious level of competence that just shows up. And a lot of the, you know, students, a lot of the novices will ask questions like, oh, well, how do you know? And it's just a lot of, and I can respect that a lot of it is coming from just, and you know, after 2 decades of doing this, there's just a level of unconscious competence and instinct that kind of kicks in at that level. So I totally respect that, and that's kind of what I was sensing. Basically, he wasn't able to articulate it that well. He was just like, there's too many reasons that this is not going to work, right? And he was right about it. Now, is he always right? No, I can definitely name at least a handful of times where his instinct was wrong, right? But my point is that most of the people that I follow with 2 decades of experience or more, they tend to be right less than 50% of the time. The people who are trying to sell you a program, who are trying to who are usually younger, like either my age or even younger, who obviously have way less experience in the game. They definitely don't know what it was like to trade through the year 2000. They might have still been in middle school in the year 2000, right? When the dot bomb tech bubble burst, and it was a different kind of crash, and then 2008 was a different kind of crash, and then the COVID crash was also a different kind of crash. So unless you have you had the experience, I don't really want to I don't really respect your opinion as much unless you've been through all that. So the people who are saying that oh, I can trade with the 87%, 90+% win rate, are usually, when I look into those programs, and I have, right, because I want a 90% win rate too, but I'm also skeptical about it. When I visit their page, they're usually super young, right, either my age or younger, and their system hasn't been tested through all the way back to 2000. They can back test, which is different, right? Back testing and then readjust, retroactively doing like a revisionist history kind of thing for your strategy is different than executing it in real time live. And so all of this is to say that the best people, I'm explaining why the best people actually are wrong more than they're right. Weird to say that, because you think you're better in every other aspect of life, like any other game you're playing. The better you are, the more professional you are, the higher your percentage rate is for whatever it is that you're hitting. Like your field goal percentage in basketball is higher if you're a professional. Like if you're a professional golfer, you're getting up and down on the green, and finishing out is higher than an amateur. But this is the one case, the one area of life where the better you are, the lower your win rate is. Weird, right? But their risk reward is where it's higher. But that's not what most of us are inclined to look at. We want the high win rate. We hate losing as human beings. We're protective, so we hate losing. So that really was, I already knew that, but that today was a really good reminder of that kind of psychology, and it really kind of helped me feel okay taking fewer trades. So I only took one trade. I only made $200 today, which is good, not bad, but I mean it was as high as like $600-700, but I gave away a bunch. So let me just let's just talk about that really fast. No, what was it? ZB T-bond futures, yes. So again, Wednesday is a day that I actually take. I'm in class, so I actually took a trade. I took a short. I think it was the 15-minute chart zone that they recommended a short on, which was right here. I think this right here, this little area right here. And so I took the short. You can see the red arrow, and it was if you let's take this and give myself like how much money was it at its highest. Oh, it doesn't tell me. Perfect. Okay, I'm not gonna fiddle with the charts right now, but at my highest point of profitability, because you can see that it was working for a while. This was like $400 something worth of profit, but it wasn't. And you might be like, Aaron, are you an idiot? You gave away $400 worth of profit and you got stopped out. I actually got stopped out for a break even. You can see that on this candle right here. I got stopped out right at break even. I didn't lose any money. So I did have a chance to move my stop to a break even point, but I didn't take any more profit than that because my target was 177.27, which is that's a little more than a full point, right? That's $1,000. So I was aiming for $1,000. So if I'm aiming for $1,000 move, that's freaking awesome, right? I mean, that's like almost half my monthly goal done in one day, in one shot, right? And there was definitely potential for that, and it just didn't work out. So once it got to the halfway point, which was right here, I was like, okay, I'm around like like a little under $500. I'm at like 400 something dollars worth of profit. I'm gonna move my stop to break even because that's the rule. That's the system that we're following. If you're halfway to your target, you move your stop to break even. But this is one of those cases where it couldn't break the previous swing low. It just couldn't. And I was like, I hope it does. I hope it does. I hope it does. I can't really do anything other than hope at that point, except move my stop to make sure I don't lose any money on the trade. But which I did. If I didn't even do that, I would have lost money on this trade, which is a good like. I think my stop was actually much higher than this. If I'm not mistaken, my stop was somewhere up like 79 something. I don't exactly remember. Again, like that's not really recalling the risk. The size of my zones isn't really part of my trading plan, but it was outside of my $125 range. This was a more of a like it was like $300. I was like, oh, that's really outside my risk. I really shouldn't be taking a potential loss of $300 in one trade. I really shouldn't be doing that. The only reason I did was because it was a trade idea that came from someone with 25 years worth of experience. So I'm like, okay, like for you, I will accept that risk and be like I'm not going to really complain. I mean, it's going to suck and I'm not going to be happy about it, but I'm not really going to complain that I took it if you're the one recommending it. And I'm taking it the way that you're taking it. I don't know if he lowered his stop along the way so that like his system isn't that. I don't think anyway. I mean, there wasn't enough room. It just retraced so quickly. But the idea here is like if once it hits to the halfway mark, then you would move your stop down. I guess maybe he got like $80 something, maybe $90 because you move it down a couple of ticks. Like literally, that's like 3 ticks, right? To here, where it crosses the 13 period moving average, the yellow line, in other words. Maybe, right? But like, you know, like in general, that's only 3 ticks, right? It's just that. This contract happens to be so expensive that 3 ticks is worth $90, right? So this trade didn't really work that well, right? It was starting to work a little bit, so but it couldn't break the swing low. So this is my point here, I guess, is that this for this in particular, this kind of trade in particular, this is. Sorry, got distracted here. For this kind of trade in particular, even though I was up $400, that's not the right way to measure how well the trade was going, right? The trade couldn't even break the previous low. Like that's what I'm talking about. Like obsessing over the process, not the price, or not the money, or not the dollars and cents, right? So here. Because I was concerned the entire time, because I'm looking at the previous swing low that I needed to break in order for me to really be confident. Like, oh, okay, now I'm confident that it'll hit target, right? But it couldn't. It was just kind of chopping around. It was kind of flirting with it, and it just couldn't break. And I was like, I don't know. I'm up $400, and it's really tempting to just take $400 off the table. It's really tempting to do that. But the most that I'm allowed to do, according to this system, right, and I'm all about being coachable as much as I can. Sometimes I'm a stubborn asshole, but I'm not. I try not to be. I don't want to be, but I know that I can be. The most that I can do here is move it for a break even, and at the most move it down to like where the yellow line was. But I mean, to be honest with you guys, like that yellow line only occurs after this candle is closed, and the stop hit my break even before the stand. So I don't think that even my teacher was. I don't know. I'll ask him. But I don't even think that he even was able to take any profit off this. I think he just got stopped out for break even, just like I did. Now you can see that it's kind of working again. We do see a tweezer formation here, so it's possible that now the next time is when it's going to be the time to break down. But here's the problem with that. I would take I am tempted to take the trade again, but there's two problems with that. Number one, it's not my idea, and I only did this to follow somebody else. The size of the risk is like 300 something. It's a $300 something risk, and that's way outside my allowed risk for my own ideas. Right? I will break my rules to follow somebody that's way better than me. I will do that. That's the one time that I'll make it an exception to my own rules. But also you see buying pressure here, right? All these wicks, right? It couldn't break a low, and you see like the momentum. Like I'm not seeing any kind of like negative divergence, really, anywhere over here, right? I'm like I'd be trying to force it, and it's like borderline revenge trading at this point, you know. So it's just not a. I don't. If anything, it made a new high, right? It made a new high above this, and above this one. I'm gonna get rid of this right now. It made a new high, and then a higher low. So it's like, if anything, this points to a reversal into an uptrend. So, you know, I'm gonna be disciplined about it. And there was a time not too long ago where I'd be like, take it again. You know, don't give up. Take it again. Revenge. You know, like, and you've probably seen some of my my thumbnails where I'm using like the Star Wars filter of like the Sith, because that's kind of how I felt. I felt like the dark side. I felt like I felt like I wanted revenge. I don't know to who, probably to myself. I don't know. The only winner I had, I'm talking about more like psychology today, because there's not really much to talk about in terms of actual trades. But here's what I did yesterday, and this is kind of what I remember talking about this in crude oil way back when we saw this period of consolidation here. Right here, I believe. I think. Hold on. There's too much noise. Give me the hourly. Yeah, right here. So I remember talking about how in crude oil I was like, oh, this is I don't know what it's called. I'm sure there's multiple names for it, but there's like pressure building up, and this is ugly because it's snapping. Come on. Okay, get rid of the lines. There's just too much noise. Give me a 240 chart. Okay, this is a little bit less noise. So you can see that even from all the way up here and all the way like down here, right? You know, from this low point to this high point, it's just pressuring and converging in, right? And so it's like it's asking for a huge move. Whenever you see someone like kind of coil up, it means they're like this, or a spring kind of coil up. The release, the more it coils, the stronger the release. Kind of a similar situation, and that's the nature of this kind of formation as well, is that this was coiling up, and it had a huge move down. Now, which way is it going to break? I don't know, right? I have no idea. But this indicates that the big market movers, like the big institutions, they're waiting. They're standing by for something. Now, I don't care what that something is, as long as I get to participate in any direction. So it's like, the idea is use this as an opening range breakout, right? It's not an opening range, but use the same kind of philosophy. And I was like, I should do that. But this was back in July. This was on July 29th. And I remember saying, like, I should do that, but I was scared. Yesterday, I wasn't scared because I remembered, and I did not want to feel FOMO again. And it wasn't quite as strong of a coiling action. It wasn't quite as strong. But I need to switch it up a little bit. But I got a little bit something similar happening with. I think I need to do this a little differently. I got it. Let's see what time frame is it easier to show it on. The hourly, 30. See, it's not as strong, so it's not going to be as convincing as that oil thing was. But it's like the idea is the similar idea to this. You know, yesterday we had a major correction. Gold fell off a cliff, and you know it brought down a lot of things with it, and you see a similar kind of formation, not nearly as strong, it's not nearly as long, right? It doesn't go for like the entire day. It happens like after this correction, and it's just like, what is it gonna do? What is it gonna do? But you see major, you see some like wicking action right here, showing buying pressure, which means that I am not trying to take this below. If it breaks below this wick, then yeah, I would definitely be more confident, looking for shorts. But seeing this little formation, I did not want to. Which way is it going to break up? I don't know, but because of these two wicks, I'm pretty sure it's not going to break straight down. Although it totally easily could after like this huge, like engulfing candle after engulfing candle, right? So what I ended up doing was I actually had a order set, I think probably on the 2750. I did the front running thing, which I kept saying that I wanted to do, right? Because like sometimes like I feel like the brokers know quarters, right? And they're like, we're not gonna let the price go all the way to the quarter because we don't want you to trade with it, or so, I don't know. Like I just get suspicious, a little bit of a tinfoil hat kind of attitude that comes out sometimes. But so I am I'm looking at this and I'm thinking like, all right, I'm gonna put an entry on 20, on a micro quarter. We talked about micro quarters, just $2.50 in this case, right? 2.5 points, more accurately. And so I put an entry there, a limit entry, and I got picked up. And I made it so that I set it up so that it was going to reverse me completely. So like up here, I'm in a short, right? And I almost get stopped out because I think my stop out was like 44, 45 or something like that, right? So I'm very close to getting stopped out, but I didn't, and I stayed in, a little bit of a profit. But as soon as it hits 327.50, especially because I'm starting to see this kind of action, and this is close. This is late at night, right? This is at midnight that it happened, yeah, or 1 a.m., right? I was already asleep by then, right? So late at night, I'm seeing this kind of like, pretend you're just seeing like these candles, right? I'm seeing that same kind of formation, right? It wasn't as nearly as strong or for as much time as the crude oil thing, but I'm like, okay, this is like pressure cooker situation. I want to take, if I was going to be aggressive, I would take it in both directions, right? I would go like this. I would take the long and the short, right? I'd set up both, right, for buy stop and sell stop orders. But I just wanted the long in this case. But I was already in the short. I'm like, all right, you know what? I'm going to take profit, small amount of profit, but I'm going to reverse the position here automatically to catch it up. Not only that, I want to stack a quarter if it goes above this high, which was at like the 345 or something. So you can see this extra blue arrow here. So like without even like overnight, I was able to get into a buy low situation, right? Buy at a pretty decent price, right? Pretty around this area of support, right? Ideally, you want to buy like down here, but that's not realistic. So so I bought at a pretty decent micro quarter, and then I also stacked into it. Remember, I talked about how I want to be stacking into positions, and then I took both. I took a little bit of profit. I took like a 1/4's worth of profit, which was $125, here, and then I took another quarter up here because I would love to continue to stack, but if you look at like the long-term chart, I might not. So it's like, okay, I can't even show it really on this. I have to show it to you here on the continuous chart. Like, we're at the point where the crash happened back in February. We're at that kind of price right now on the S&P. So I'm like, I don't want to. I'm. This is the area where it's like I'm very, very scared, very respectful of like this area, this little zone, this zone right here. Yeah, that. Come on. Oh, it's not snapping. That's why I turned the snap off from before. Okay, so like I'm very, very mindful of the fact that we're smack in the area of where the crash occurred. Same price, same level. So I just took my profits and I got out. And so today's the first day that I am actually not in any carryover positions. So I'm actually able to accurately say like, oh, this is where I'm at. I'm currently in no positions right now. And the market's been open for an hour and doing stuff, and I'm not participating in it at all. Although I did set up a euro. I want to just take a shot. Right, this is a small risk, so I'm just taking a shot, and I think that's the only order I really have going right now. I don't think I have any other setups. Maybe I'll take a shot here. I don't know. I'll just do it because I can show you that I'm on the order. So like I'm taking 2 contracts, risking $1.25 per pip, a total of not even $50 total, and it's like I'm just taking a shot, right? I'm just like little things like this is a little bit more gambling-esque, but it's a 3,000. It's a huge quarter. It's the strongest price, so it's like. That's enough of a reason for me. So yeah, send the order, open target. If it hits, I'll start. If it hits and the RSI goes high, especially, the RSI is not breaking below 40. I like that because then it's not showing really bearish momentum on the 4-hour. On the 1 hour, it's showing some positive divergence and yeah. So I'm like, maybe I got more than one reason of confluence to take the long, right? So I set it up, not risking too much, probably not going to gain too much, but if it starts breaking above the 75, I'll add one. If it starts breaking, add another contract. If it starts breaking above this high, I'll add another one, right? If it starts breaking, let's go back, let's zoom out a little bit, right? Okay, so I'm going to start respecting the 31.75 because you can see that it spanked down the price, it reversed strong there, so I'm going to take some profit there, but leave at maybe the original 2 contracts to keep pushing, right? Because that's the goal for me, right? So that's just this little summary of my quarters trading strategy there. So I'm going to take the shot there. But pretty much today is a day where I'm pretty much gonna not have anything really happening overnight. And so what I ended up doing was I ended up taking last month I made about $1,000, but this entire month I've always been in something where I couldn't take that $1,000 out, right? And I want to take that $1,000 out, and I'm gonna buy something with it, right? Because it's important to get positive reinforcement, guys. This is how This is a completely different story, but this is a similar setup, mental structure, psychology structure-wise, of how to reward yourself to keep positive momentum going. And I did this when I was quitting smoking, right? I know that when I was first starting to quit smoking, it was like the first few months was really, really tough for me, and I rewarded myself every month that I didn't have a single cigarette with like $150 to $200 worth of, just treating myself, right? Because that's approximately how much I would spend on cigarettes way back then, right? If it was today, it'd probably be like $500. Cigarettes are freaking expensive. It's crazy, right? But that I gave myself like that kind of an allowance. So it's like the same kind of thing here. I want to program my own subconscious mind to like, hey, you know, you do well, you get treated. You do well, you get treated. So like, you know, don't be risky. Like preserve capital. You know, $1,000 isn't my goal. 2,200 is my goal monthly. So I didn't hit my goal, but I still made money, and I wanna be positive about it. I'll make another video about it. So make sure you stay subscribed and you follow me on Facebook and stuff like that, because I will make a video about what I am gonna buy with it. And if I'm profitable in August, then same thing. Whatever amount that I'm profitable, I'm gonna treat myself to something with it. So you can get every month. You can expect to see a video about what I'm buying with my profits. If I have no profits, no buying, no purchasing until like I make up for it the next month, which is a kind of a risky negative reinforcement. But hopefully we don't have to think about that too much. So that is the that's something that you can look forward to seeing. And so I did withdraw my profits from last month. I am starting with 5,000 for August, and as of today, I am up like $600 something for the month, and that means that I am still behind. The month is almost halfway through, and if my monthly goal is $2,200, then you know if I want to be on track with my monthly profits, then I should be somewhere around $1,100. To be fair, just in case you're wondering, my goal is a very lofty goal. $5,000, and my goal is to make $2,200 profit. My goal is basically 45% in the month, which is high. Okay, that's not necessarily a good, like, healthy, realistic goal. It's just like you know, it's just me practicing a little bit of like shoot for the moon, and then you know, like even if I miss, I'll land amongst the stars, kind of thing, right? That's the idea here. 45% per month is not a like it can be done. You know, I know people who have done 450% in a month, but it's not a thing that you do consistently, right? It's just, I don't know. At least for me, at least at me and my level, I like my teachers are saying don't expect 45% in a month. That's crazy. If I get 10% in a month, which I'm already past, you should be like, all right, that was, you know, solid month, right? Solid month, right? So I'm not exactly bragging. I am just clarifying what is common and what is not common. If you want to make $2,200 a month consistently, you should be taking like a little bit bigger risk per trade, and probably with a like $10,000-$15,000 account, which would give you like 10% to 20% per month. Even that's kind of a little bit aggressive, but it's way more reasonable. I'm aiming for 45% a month, which is high, right? So it's like it's not a goal that like I'm like going to be devastated if I don't hit, right? It's just like that's what I'm aiming for. Like I want to be. That's how good I want to be. I want to be able to get $100 a day off of a $5,000 account. I want to be that good. So anyway, just sharing that because I don't think I shared that before. So that's it for today's video. So far so good. You know, I do want to get picked up on some of these trades and show you a little bit of more of like the stacking of the quarters, but I'm not going to force anything, right? So you're going to see me do a little bit less and do a little bit less forcing, because that's what I did a lot in July. Okay, so stay tuned for the next video from YouTube. Make sure you hit subscribe, make sure you hit follow, and I'll see you tomorrow.